Hi, and thanks for tuning in to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Nick Frasse, who's an Associate Product Manager at VanEck. VanEck just launched a new semiconductor ETF, the VanEck Fabless Semiconductor ETF with the ticker symbol SMHX. Can you tell us a little bit about this ETF?
Yeah, for sure. And we launched on Wednesday, the 28th, so a couple of days of trading. We saw the success of SMH and really just the success of the semiconductor industry as a whole, and thought, how can we continue to capitalize on this, but also bring a great long-term story to our investors. And after a lot of digging and walking through different indices and different ideas, we landed on the Fabless cut of names. And it really just boiled down to seeing Nvidia's success, right? And what was the key drivers to those success? And really, we believe it's the fabless business model, right? So fabless companies being companies that outsource the manufacturing, and they just have a lot more room to maneuver for innovation, right? They have a lot less capital expenditure. They can invest a lot more in R&D. It allows them to just be more innovative. And we really think that, based on the landscape as a whole, these fabless companies are set up to be successful moving forward, especially versus their more integrated counterparts.
That's great. Of course, SMH, which you just referenced, is a highly successful ETF. I think it has over $20 billion in assets under management. Can you tell us a little bit about how the portfolios of the two ETFs, SMH and SMHX, differ?
Yeah, sure. I would say that SMH is still the gold standard for large, liquid, broad, diversified semiconductor exposure, right? It's 25 names. These are the leaders of the semiconductor industry. SMHX, we really wanted to go a step further and find companies that were, yes, driving 50% or more revenue from semiconductors, but they also need to be classified by Market Vector, our indice partner, as fabless, right? So outsourcing most manufacturing of the actual chips themselves.
And I'm looking at the holdings of the two ETFs right now. I noticed Intel, of course, isn't in SMHX, neither is a Taiwan Semiconductor company. But I also noticed that Nvidia makes up about a fifth of both of the ETFs. Do you expect that, the performance of these two ETFs is going to be pretty similar, or could they diverge significantly?
In the near term, I think they're probably, you have a lot of similarity there. But what we believe is that as the industry continues to evolve, and we believe that we're in the very early stages of this AI revolution and really just edge technology and just the technological revolution as a whole, right? So we believe that the fabless names are going to be the ones that continue to drive forward, and there's new opportunity for them, so that over time, these portfolios, although they look very similar, not very similar, but they do have a decent amount of overlap right now. Over time, that will change, and the fabless will become more diversified as, for instance, Nvidia's market share loses some of their market share, right? To think that Nvidia is going to own 100% of their market share forever, probably not realistic. And we believe these other fabless names in the portfolio, like the AMDs, like the ARMs, these are the companies that are going to come in and they're going to be able to take market share and also give us more diversification for SMHX over the long term.
That makes a lot of sense. Nick, before I let you go, I want to ask you about the semiconductor industry in general. Nvidia just reported earnings and the stock dipped a little bit, 5, 6, 7%. Do you think this is a buying opportunity, after this slight pullback?
I think, from a house perspective, we've been saying that maybe these Mag 7 names, which include Nvidia, have been a little bit overbought over time. So there's some sort of reversion to the mean that we believe will take place. But ultimately, Nvidia's business model is great. And I think investors they're just lost a little bit of that wow factor, normalizing growth, and people are starting to see that, hey, maybe they can't beat by such large percentages forever. So you saw a little bit of a pullback there, that maybe there was a little less optimism, but ultimately the business model is great. We believe in semiconductors. That's why we would launch another fund, right? So ultimately, at the end of the day, we think that we're still very early innings with the way that technology is advancing on a day-to-day basis, really, that these semiconductors companies are going to lay the foundation for that technological advancement from a global perspective. So why not, be able to access the designers in the space that are really architecting this?
Fantastic. Well, we're going to have to leave it there. Nick, it's been an absolute pleasure. Thanks so much for your time.
No problem. Thanks for having me.